After a bloodbath in precious metals markets since late last week, Tuesday saw a reversal with gold and silver surging again. Gold gained more than 5% to back above $4,850 an ounce. Silver gained over 11% to back above $85 an ounce. The white metal now is up 20% from its low in just 12 hours. Prior to 2025, there had been just a handful of brief instances in silver market history where prices were above $40 per ounce. And on Friday, traders were shocked when the price of the precious metal dropped by that much in less than a day. Speculators in China have been pumping hot money into the metals market. That sent prices soaring for commodities like gold, silver, copper and tin, leaving traders all around the world watching their screens for weeks. And then in the span of just a few hours, the upswing turned into a significant collapse in the commodities markets. On Friday, silver fell 26%. That's a record, while gold fell 9%, its lowest day in almost a decade, even before the unexpected surge beyond $14,500 per ton petted out. Copper dealers were in a state of disarray. The head of trading at Heraeus Precious Metals saying, and I'm quoting, "In my career, it's definitely the wildest that I have seen. Gold is a symbol of stability, but such a move is not a symbol of stability." After another heavy sell-off during Asian hours on Monday, the plunge in precious metals eased a bit. Gold fell by about 4% after tumbling 10% earlier in the day, but gold still extending its biggest slump in more than a decade on Friday. Silver dipped by more than 7% after sliding 16% earlier and posting a record intraday drop on Friday. Precious metals, meanwhile, had risen to record highs that shocked even seasoned traders. A Bloomberg report quoting sources showed Chinese metals traders racked up losses totaling at least 1 billion yuan or $144 million. And this comes after one of their counterparties fled the country, leaving deals unfinished reportedly. And that has alarmed top regulators who are now worried about hidden financial risks. Bloomberg sources reportedly said at the heart of the crisis is a trading network facilitated by Shu Maowa. Shu Maowa, a metals dealer nicknamed the Hat. The dealer could not reportedly pay after the collapse in prices of precious metals and fled China. Separately, from hedge funds to homemakers, the leverage-loving Chinese traders behind gold's record rally are now nursing big losses. And this comes after one of the fastest and deepest market reversals in years. For many, the investments in gold before the losses lasted only a week. Friday's sharp drop wiped out gains and triggered a forced liquidation, with some losing as much as 84% of their investment. Still, the gold bust and losses are not restricted to those in China, of course. Traders worldwide have also seen a significant wipeout in their bets. A politically unstable Pakistan is now exporting military power abroad to Libya. Recently, Pakistan and Libya have held high-level military talks focusing on security cooperation and regional stability, reportedly. On Monday, the Libyan National Army commander met Pakistan's Chief of Defense Forces in Rawalpindi at the Pakistan Army General Headquarters. Libya's Eastern Prime Minister was also present. According to Pakistan's military media wing, the Inter-Services Public Relations, both sides reportedly discussed matters of mutual interest with a focus on regional security and professional cooperation. The ISPR said the talks emphasized the importance of continued engagement between the armed forces of both sides. But here's the kicker. This meeting comes just months after Munir visited Libya in the month of December. Reports suggested that Pakistan may have reached a $4 billion defense deal with the Libyan National Army, including the possible sale of JF-17 fighter jets and Super Mushak trainer aircraft. So far, neither government has officially confirmed the agreement, but the timing is very significant. These talks are taking place against a United Nations arms embargo on Libya, which has been in place since 2011. It requires UN approval for any transfer of weapons or military equipment. But it's unclear whether either side applied for exemptions. During the meeting, Aslan Munir reaffirmed Pakistan's commitment to strengthening bilateral ties and supporting peace, stability, institutional development in Libya. The ISPR described the discussions as cordial and constructive and as reflecting long-standing friendly relations between the two countries. But Libya is far from stable. The country remains divided, with Haftar's forces controlling much of the east and the ongoing political rivalries shaping its security landscape. Meanwhile, Pakistan in recent years has been busy expanding defense cooperation beyond South Asia into West Asia and Africa, exporting military training, institutional support, and now possibly hardware. If the $4 billion deal goes through, this would be one of Pakistan's largest ever arms exports. Not to mention the fact that it would, in a way, position Pakistan, a country known for harboring terrorists and facing constant political turmoil, as a global arms supplier, perhaps. And let's not forget, since Libya remains under a UN arms embargo, it would technically prohibit such transfers. And so the risks could not be clearer. A politically unstable, terror-tainted country extending military influence abroad, or at least trying to. And this could fuel ongoing conflict, destabilize Libya further, and also undermine regional security across North Africa. So then, does this development merit more scrutiny from the world and from countries watching the Africa developments closely? Indian exporters cheering the announcement from the United States of a deal that cuts tariffs on Indian goods to 18% from the current 50%. Two trade deals following each other in quick succession are good news indeed for the economy. Since Trump also spoke about Russian oil imports to India, the Kremlin has reacted to Trump's remarks. The Kremlin asserting that it has not heard from India about New Delhi halting Russian oil purchases. It also vowed that India remains Russia's strategic partner of utmost importance. In fact, the Kremlin said Russia only plans to elevate ties with India. Earlier, Trump had said that India has agreed to stop buying Russian oil, but the Indian government is yet to issue the details on the cut to Trump's 25% tariff for buying Russian oil. In fact, Trump also said India will buy goods worth $500 billion from the US without giving the details of the timeline. Indian purchases are set to include American energy, tech, agricultural goods. Will that American energy include Venezuelan oil, which Trump recently allowed India to buy? Remains to be seen. The details will be in the fine print, of course, which have not been made public as of now. Trump on Truth Social, meanwhile, said, I'm quoting now, out of friendship and respect for Prime Minister Modi, and as per his request, effective immediately, we agreed to a trade deal between the United States and India, whereby the United States will charge a reduced reciprocal tariff, lowering it from 25% to 18%. And soon after, Prime Minister Modi, after speaking to President Trump, in a post said, quoting, wonderful to speak with my dear friend President Trump today, delighted that made in India products will now have a reduced tariff of 18%. Big thanks to President Trump on behalf of the 1.4 billion people of India for this wonderful announcement. And the US ambassador to India, seen as crucial to ending the stalemate between India and the US. Indian exporters and US businesses are now waiting for the details to operationalize the reduction in tariffs to 18% from 50% that kicked in from August 27 last year. The country's labor-intensive sectors, which were the worst hit, are now expected to significantly benefit from the lower US tariff rate. And the deal has boosted the prospects for gems and jewelry, Indian textile, fisheries and shrimp, engineering goods and chemical industries. And India is set to benefit from lower tariffs and gain a competitive edge for its exports in the region. Now, the latest US deal also helps in boosting India as a choice for businesses looking at a China plus one strategy within the neighborhood as well. India now becomes a competitive giant, as it did before Trump's 50% tariff since August last year. From having the highest tariff rate, the latest deal cutting Indian export levies to near the lowest in the region. In fact, only Japan has a more favorable tariff gap. An Indian minister, Piyush Goyal, hailed the agreement, saying that this is a deal that will make every Indian proud.
I can assure the people of India, I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud.